Alex Yao, oh Alex Yao, my favorite analyst from JP Morgan. So for those of you who are invested in Chinese stocks, I believe you will have a love-hate relationship with Alex. So Alex and his team actually issued the price target for Alibaba to be at $65 not too long ago. And more importantly, they stated a public position that China is uninvestable, at least in the short term. So JP Morgan later retracted that public position, and the editor-in-chief claimed that the publication was actually a mistake. So you know what else is a mistake? Not smashing that like button. So you better correct that mistake right now. Technically, as a Chinese equities investor, that period of pessimism was a really good indicator of market sentiments. When even all the different bulge bracket banks takes the position that a particular company or a sector is quote-unquote untouchable, or when they use the word quote-unquote uninvestable, which is not even a legitimate word by the way, the finance world ran out of vocabulary to describe the investment. That's essentially the last straw. Now, I've already made prior videos on JP Morgan's position and even done a deep dive on the analyst report. It was a 3-part series. I'll leave the link below if you haven't catch it. So do note that I have no intention of trying to dox or cyberbully Alex or his team. Besides, they probably couldn't even care less about what I have to say on the internet either way. So please don't go email him about it. I'm watching you. So this video is not a further elaboration of that debacle. Instead, I would just like to focus more on the questions Alex actually posed to Alibaba's management during the recent earnings call, and probably also a TLDR for all you investors out there who didn't bother going through the later part of the earnings call where the different analysts from the different bulge bracket banks posed questions to management. So sit tight, grab your coffee and listen on. So of course, Alex Yao, being an astute analyst himself, he was there representing JP Morgan, posing questions during the Alibaba Q4 results day. So what better way than to hear the question from this astute analyst himself? So do note that he posted the question in Chinese. I'll be playing the translated version because we're on YouTube, not Weibo or Youku, so that's not his real voice, just to clear things up.
Daniel, in your script, I believe you talked about incentives or stimuli that may be forthcoming from the government to help support the business of internet platforms and drive consumer spending. I'm wondering if you could tell us what kinds of businesses do you think will benefit from these kinds of incentives, and what kind of stimulus we can expect to see, and how Alibaba can position itself to capture the benefit of this policy.
So I think there are two core parts to his question. Due to the recent intensified discussion between government officials and these big tech companies, both openly and behind closed doors, Alex wanted to elicit specific details of the different incentive and stimulus that we are expecting from the government, at least in the short term. So the second part of the question is focused on the impact of the said measures on Alibaba's different businesses. I think it's critically important to know what the Chinese government intends to do to help steer the economy and by extension, the markets. So just last week, they released 33 new stimulus measures to boost the economy. I'll leave the link in the description box down below. Go check it out if you have the time. So my general thoughts, they are incremental, far less drastic compared to just flooding the economy with money. And I wouldn't really call it quote-unquote stimulating the economy, but rather, it's much more positioned as stabilizing the economy. So that's besides the point. Let's hear what Daniel have to say.
We've seen that the government has been coming out with various policies lately aimed at stabilizing the economy, stabilizing employment, ensuring the provision of essentials to people, including yesterday a very important national meeting convened by the State Council to implement measures in 6 different areas, several of which are highly relevant to the business of Alibaba, including stimulating consumption, ensuring the provision of essentials, and achieving supply chain recovery. So that's all highly relevant to us. As a responsible representative of the platform economy and also as a constituent of China's real economy, Alibaba is, of course, keen to make our due contribution to driving progress in all of these areas. And a very important part of this, of course, is SMEs. These small businesses, because of their scale, have been the most vulnerable to the impacts of the pandemic, and we very much want to help them recover. Only when SMEs have recovered can more market-based jobs and employment be generated.
Now, I think from the short response, even though it feels very much like standard big corporate answers, there were still some inferences you can make. So Daniel actually touched on three important aspects: stabilizing employment, ensuring the provision of essentials, and supply chain recovery. So nothing about stimulus, giving unemployment checks, etc. So this then sets the expectations of these different big tech companies from the government's point of view at least. So although the three pillars are all critical to Alibaba's business, you can probably infer that the growth rate for these big tech companies will probably stay depressed, at least in the short to medium term, due to the lack of stimulus, if I can put it. So the government probably don't have any bold or wide plans to implement unless things really head south. So with the current trajectory, they're just trying their level best to fulfill the baseline demand, and anything in excess is a bonus. More importantly, like every other economy out there, the small medium enterprises are the backbone of almost any country, and Alibaba is precisely the enabler of small businesses, which makes their role far more important.
For Alibaba, this is where we can have a very unique role to play, leveraging on our resources as a responsible company in society and as the operator of a digital economy, and we see this as a basic responsibility. We've been doing everything in our power to provide support and assistance to merchants, and as mentioned with the upcoming 618 festival, we have 20 initiatives in 5 major categories, and recently during the very difficult period in Shanghai, we had 20 special measures to support merchants during that period. We hope very much to be able to support merchants in these ways to facilitate their recovery and success.
Now, it couldn't be any clearer in the message Daniel is trying to bring across. You help us, we help the SMEs, and the SMEs rejuvenate the economy. So he even added that they are adding special measures to support merchants for the upcoming 618 event. So it's a very sneaky posturing, but we shall see if the Chinese government buys it or not. Now, to just give you a very simple summary of the analyst questions and management's responses, Eddie from the Bank of America was inquiring on the core business model and whether are there structural changes in operations. So it's true that consumer patterns are evolving, especially in a pandemic environment, but it might not necessarily lead to long-term change. Alibaba is currently plugging the gap with the capabilities and capacities, and Daniel believed that Alibaba is actually the company to achieve this approach of meeting diversified needs. Next, Thomas from Jefferies is interested in understanding the changes in consumer spending from the different income segments and also the KPI from the 618 event. So Daniel gave a non-answer. I think he pretty much didn't want to give a breakdown. So it was just a very brief common knowledge to investors where we know that in such a period, demands for essentials will skyrocket while non-essentials are a lot more price sensitive. So it pretty much skirted away from the KPI targets for the upcoming event, especially when the overall economy is looking weak, and to put the cherry on top, there was no forecast provided by the company at all. So Jerry from UBS has concerns about cost optimization and control as a group. So Toby was very upfront in his reply. That is the strategy for Alibaba, at least for the next few quarters. All your moonshots and those that aren't generating long-term value, it will be scaled down or even totally removed. Spending will be cut back, and achieving strong balance sheet and cash flow generation capabilities is the utmost priority. So these are all extremely shareholder-friendly terms. Not too sure what game they're trying to play here. Alicia from Citi probably asked one of the most important questions out of the whole lot. And Daniel also gave the longest reply, and it was a lot more thoughtful, and that was regarding the cloud segment. So she wanted to know what other factors are impacting the cloud business, at least in the short to medium term, what kind of growth can we expect after we revert to normalcy, and what impacts are they expecting from the recent restructuring and personnel changes in the cloud space. So Daniel reiterated of the importance of the cloud business and in the grander scheme of things of digitalization in the Chinese market. Essentially, if I can put it this way, all industries are digitalizing, and Ali Cloud's TAM, which is total addressable market, is basically everyone. So he's also looking beyond your traditional infrastructure as a service cloud provider. very much trying to penetrate into providing other value-added services like big data, AI, and much more vertical-oriented approach, much like a consultant. Long gone the days where cloud services are traded as commodities. So I think similarly for the competitors, both Tencent and Baidu namely, are also trying their level best to differentiate their products with the said AI, machine learning, etc. So we shall keep our eyes peeled. Hope you enjoyed the truncated version of the Q&A. I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!